Hello guys, welcome to the live stream. As always, we're gonna go through some of the analysis. And morning, Jennifer. Thank you for joining. I'm gonna go through some analysis in a second. Obviously, I don't have any trades open. I have no positions open, and but I've got a couple of things I'm looking for a potential trade. This was one of them. However, the market kind of reversed before it got to the place where I would like to have placed my order. So yeah, so we're gonna go through some analysis soon. And no, I didn't, because I didn't get my I was just 5 pips away from getting my strategy for the extended runner. I was just 5 pips away. The market did not give me that, so which sucks because it would have been a nice short, but I should be getting a short on the GBP yen today, but obviously it looks like the market is reversing already, because I've got this I would have gone short somewhere here at around 169.27, but the market could still get there. I mean, it's still, what time is it now? It's only 8:30, so I still got about an hour and a half to see what the market is going to do. But yeah, I did not take a short position on the GBP yen last night. So let's try and look at some currency pairs and see before this market does what it needs to do. So guys, you can suggest what currency pair you want me to analyze. I can have a look. I had a look at this yesterday during the live session, and yeah, so the euro pound, this is all pointing out towards a sell very soon. Now we might get a sell signal on this one very soon. This is just based on structure, guys. It's just based on structure reading, where the market is likely going to come back into this previous structure, and then we might see a move back down. So that's the idea behind the euro dollar trade, of obviously looking at it on a higher time frame. The market has recently broken structure, which tells you that the market has obviously given you the intentions. Euro, US dollar, yes, that's what I'm analyzing right now. And obviously this is very key, the fact that the market has broken structure. I think I pointed this out in my analysis yesterday, that you can expect the market to give you a reaction, because every time a market breaks a structure, it will retrace. I mean, you can look at this as a bullish structure here, where the market has set a new structure high, and after a new structure high, you get the next outside return. So the market is currently in the process of forming the outside return, and that outside return cannot go beyond the previous structure, and it must touch the 382 Fibonacci retracement. So the market has already come into the 382 Fibonacci retracement. So at any point in time, you should probably expect the market to reverse and start going up anywhere within this zone. We're already in the zone, but obviously looking at this market on a lower time frame, we do have a potential short-term opportunity. I think the market could go a little bit lower before it reverses. Will I be surprised if it completely reverses from here? No, not really, because all the conditions have been met for an outside return in terms of like the 382 Fibonacci retracement and the market staying above the starting point. So, but on the lower time frame, the market doesn't look ready to go yet, based on its structure. So that's why I said we might see, until you see something like, if the market comes, the market doesn't go down to certain new lows. So let's say the market comes in this structure, there is going to be a reaction. Of course, at this structure there will be a reaction. The market always does that. Unless if it comes back down, makes a double bottom and starts to go up, then you got your signal to go long on the market. But yeah, here we can definitely expect the market to come back into this structure and show a reaction. You can even look at this structure and see bearish impulse leg, and you're getting a contracting pattern here. And this contracting pattern usually break to the downside. So the euro, definitely you are going to get a short trade on the euro. Sometime today or tomorrow you will get a short trade on the euro. The question is, if the market comes back to this previous structure, what's the reaction going to be? Because if it comes back and break this structure, then again you can be looking at the market to go a little bit deeper. And we know when it comes to the outside return of this structure, the fact that this market has all the freedom in the world to go anywhere within this zone before it reverses, then you can expect the market to go a little bit lower. So with the euro dollar, I'm looking for the market to go a little bit lower, but also maintaining the fact that the market on a higher time frame is bullish, and the fact that the market has set a bullish structure, and the fact that this market has come is in the reversal zone already for the outside return. So on a higher time frame, if where you're gonna put the most risk on this trade, it's gonna be on the upside. But if you're going to trade short term on a lower time frame, if you're a day trader, I think you can only be selling the euro dollar based on the current structure. So let's look at the pound. I think I looked at the pound yesterday. Yeah, I looked at the pound yesterday. I told you guys we have come into a previous structure here, where the market has broken and is coming back to retest that structure. Obviously, the market retesting the structure, I mean, I wouldn't really advise anyone to trade this, simply because structurally speaking, in terms of where you're gonna, I'm gonna put this on a daily chart, maybe it's gonna look better. Yeah, so structurally speaking, if you were to trade this, your stop loss will have to go below this structure level. That's where your stop loss will have to go. So it's not really worth it taking a trade on the pound dollar based on the current structure. It's not worth it, because the risk to reward ratio is just not favorable, and you want to be taking trades that have a favorable risk to reward ratio. Stop loss below here is going to give you a negative risk to reward ratio, even though the market could potentially go up from the current structure level here. And you're even seeing a reaction. We got this reaction yesterday, but it looks like the market is still coming back to that structure level. I mean, that should tell you something, because if you look at this market, that structure level, the market has tested it on several occasions. So it shows you that the market loves that structure level. So there's no guarantee. If you were to go long and you place a long trade here, don't expect the market to just reverse on a dime. Sometimes it does, but this could happen. And I mentioned this in my analysis yesterday. You can expect this to happen. The market could go back to retest that structure. It can even go a little bit lower. So we don't really have any short-term trade on the pound dollar. We don't, unless, if like I said, if you're going to play off on these structures and just buy when the market comes to this structure. But your stop loss will have to be, you have to be very, very careful where you put your stop loss. New Zealand dollar might also give me, I think I've got up, I'm waiting for the market to get to my entry level. We're quite far off from there actually, so yeah, I won't be surprised if the next move of this market is down again, because this is another scenario where you have an impulse leg and you're getting a pullback, a slight pullback, a slight retracement. So this market could continue going down.